Read Sun Tzu, The Art of War. Every battle is won before it's ever fought. Think about it.
When it's on, it's on. Everything is starting to gear up for the next phase, the entry into the bull market. We're seeing massive shifts in all the right places, and we're about to break down finite details exactly behind what is causing this upside momentum. Now, from a broad view, everybody's looking at it and saying, yes, Bitcoin has just reached that $100,000 milestone. It's backing off and some liquidity is pouring into the altcoins from it. Yes, this is 100% true, but this rabbit hole goes much deeper, and it's identifying these key catalysts, part of Satoshi's secret, part of what we teach on this channel and inside VIP. One of the reasons why we need a giant VIP library is because you can go to college for this for 8 years. We need to know enough of it to be able to trade off of. And the urgency is starting to creep in more and more, as we all realize. By quarter one, just taking a look at Kaspa, for example, and we're going to draw some connections from Kaspa into artificial intelligence. Kaspa can run AI. Absolutely. And they're already showing models of this with Cassandra, just a simple AI chatbot. Kaspa can run ChatGPT-4. And as they start to up the block speed, it'll attract more developers. One of the things that makes AI powerful is more hash. Already, Kaspa has a monster hash rate, second only to Bitcoin already. So there's a huge computational power there, and that's horsepower that translates into the IQ of an artificial intelligence. So when we're talking about AI, we're absolutely talking about Kaspa as it starts to upgrade. We're looking at a visualized model here. That was the 1 blocks per second. This is 10 BPS. This is all going down in quarter one. And of course, the team has synchronized this with greater monetary policy that we'll jump into in a moment. As these finite details are rolling out, they're absolutely affecting the market. You guys remember back the September 18th rate cut? Everything started rocketing to the upside, from Bitcoin to the total 3, you name it. Right here, boom, we get the September 18th rate cut. Look at the altcoin market cap. It just goes flying to the upside. And we're going to touch base on these classic patterns. I know everybody likes to shy away from using technical analysis, but because we have such a detailed trading journal backing up all these projects, these call outs like Solana, falling wedge, buy zone, 130, mirroring the total 3, which is right now forming a broadening wedge pattern. As we zoom in, we can look around crypto and find this exact broadening wedge, a known bullish pattern, and look for upside off of it. But we'll get into that in a minute. The most important thing with technical analysis is connecting it with the fundamentals. What's actually the driving force here? It's not just the psychology of the market showing us shapes on the chart. There's something behind the movement, and that's what we're breaking down right now in detail. ICPs, the plasma tech, very unique, could be connected to artificial intelligence, absolutely. We're hearing a lot of these talk about these big listings coming up. Looking at another AI project, we got the MEXC listing here, the Gate.io listing here. And for a project of this market cap at the time, it was like 40 million. It wasn't until that September 18th date when they altered monetary policy that this started just absolutely ripping. Now, something just happened monetary policy wise just a few days ago. Inside VIP, we translated this into, it was the final discount on Moonwell, knowing this wasn't going to be enough of a driving force to shoot Moonwell to new all-time highs. But we were like, yo, if you guys wanted to wait and buy Moonwell at the low, this is it. This is the last chance. And this translated into monster rips on our 24-point certified gem. This is a blank copy of the 24-point system. We have 7 of these filled out. This was our last call out before the breakout on DEAI, using some more detailed technical analysis with our one-day oscillator swing back. But we'll touch base into that in a minute. Our original buy alerts back at the BOJ carry trade, this was our go-to target. This and Fire, because it's based in Japan, that gaming pick. Scooping it up, not at that flat level of 5, but $5.20. I actually went for $4.85 and got a fill, which was great for Spectral because this is a runaway train right now. Not only have we made new all-time highs based on this driving force that just kicked Moonwell off, got everything jump-started that we're going to touch base on in a moment. We got new all-time highs, so this is going to start ripping like Tau did. And of course, Tau being the flagship project, also seeing some breakout from this symmetrical triangle. And it was really 2 patterns clumped together, these 2 head and shoulder patterns, each one. Statistically, the head and shoulders will get a pullback of 70% in price action. And we saw that exactly twice in a row. This is a 70% reduction. Here's a head and shoulders pennant, which is any pattern that's less than 3 weeks. And we got an exact 70% pullback, excuse me. And now we're starting to actually see some upside breakout on Tau, the flagship AI, getting ready to rock and roll. So hopefully everybody inside VIP scoops some bags up of that. Jonathan's been talking a lot about upgrading Kaspa to the 100 blocks per second. Every time they do this, it becomes more environmentally efficient as well. It wastes less electricity. Imagining that this was Bitcoin, this is a rough translation. All of these miners are working on a block, but the thing is, only one of many different miners is going to solve that algorithm, and the rest of those miners just wasted energy. With Kaspa, all that work, all that computation they did, it just gets thrust forward on the chain. That's why it's environmentally efficient. And with all the climate narratives coming up, obviously Kaspa, massive go-to. And it's been building up for so long. We'll do a deeper dive on this technical analysis, but very soon, within this next up-and-coming catalyst, which is taking place on December 6th, we're 7 days away. We all know the FOMC meeting is coming on the 17th, but there's a catalyst before that, which is going to hold so much weight. Let's start talking brass tacks here and jump over to this FOMC link. What happened the other day was that gave us the call out on Moonwell and realized that everything was going to start jumping to the upside was they finally released the minutes. So right here, these are all those FOMC meetings. Looking at the Kaspa chart, we know this is massive connection to Kaspa and the investment bankers, because every time they're getting an updated information on monetary policy, they're making a move on Kaspa. Non-stop. All these FOMC meetings have caused massive upside. Now, what just happened a few days ago was they released the official minutes. This is a summary of what already transpired on November 6th and 7th. You know, all those reporting asking Powell, they're saying, hey, are you guys going to cut rates again in December? This is where they make their official statement. And they humding over a lot of stuff, wage growth, jobs, until they get to this line right here. And this is key. A large majority of the board of the FOMC, they're doing a 25-point basis cut in the December meeting. right there because we weren't sure. It was ambiguous. They might have done no rate cut in December. Now it's on like Donkey Kong. The FOMC is cutting rates. Therefore, all of these runners that saw insane upside from September 18th, like look at Spectral. Down here, all of a sudden they start talking about rate cuts. Boink, it launches to the upside. Once the teams can get their hands on more cash, it's good. But this is the tip of the iceberg. This rabbit hole goes way deeper. To give an example of what we're about to break down, with AI regulation and this new concept that's known as Operation Choke Point. This was started in the Obama administration, and they're using it right now with cryptocurrency. How many of you guys own an LLC, perhaps for your mining garage, that has anything to do with crypto? You'll realize how much of a difficulty it is getting a bank account for anything that has to do with crypto. And this is all part of Operation Choke Point. There is so much regulation in place right now to stop the growth of crypto. It's mind-boggling. And what's happening while they're shifting into this bullish monetary policy, while they're ending quantitative tightening and starting quantitative easing, all part of Satoshi's secret. There's a whole nother layer, but we're getting ahead of ourselves here. Let's rewind and take a look at historically how regulation has affected the crypto markets. The central banks and the government, they're working hand in hand. The beginning of these videos, we show a poker table. This is symbolic of what's going on in the crypto markets. It's retail, whales, miners, central banks. We're all at this poker game. And take this one all the way to the bank. The central banks and the institutional banks, the BlackRocks, the Jane Street. We're going to jump over to the Joe Rogan podcast where this guy, everybody who does detailed research, you've came across this name before, right? Andreessen. It's in the 24-point checklist as one of the good VCs. This guy's a heavy hitter in crypto. And he starts talking about Operation Choke Point. We'll get to that in a second. So this is historically how they've affected it. So we're in the last bull market. Everything's ripping. People are making cash hand over fist. And this is symbolizing the altcoin market cap top and Bitcoin's top. It's right around that November date. There was obviously an FOMC meeting right here where the Fed shifted some monetary policy. They're doing this right now in a bullish effect, but they started becoming bearish. A very simple way to look at it is they started raising rates, although this goes deeper. They actually shut off quantitative easing, which means that they're switching the Fed's balance sheet. They stopped putting liquidity for these guys to invest in crypto. And this is when they're signaling on the poker table, okay, time for some downside. Now the White House steps in. Crypto starts selling off, and now they drop the executive order ensuring responsible crypto development. And this, there's a quick relief rally, and then it's a massive bloodbath. I mean, everything is selling off. It's a complete nightmare. Of course, you get your FTX here, the Terra Luna crash, and this is just all resulting, it's all combined pressure put together. Historically looking back, people will blame this entire downside on FTX. It was happening anyway. There could have never been an FTX and Terra Luna, and this downside was still taking place because of the central banks and the government stepping in. This guy just went on the Joe Rogan podcast and he started talking about they're debanking everybody in crypto and artificial intelligence. They told that guy who does a lot of startups, they said flat out, bro, don't even put any money into any startups. You're going to lose. The government's going to make sure there's only 3 companies in all of the United States. This is like communism 101 that are running all of AI. That's it. This is part of Operation Choke Point. The Obama administration started this off, and there's some good side to this. They regulate the marijuana industry. You know, when you go in and buy legal marijuana, you cannot put that in a bank account. This is all cash business because the government's trying to step on their toes. So it's marijuana, guns, and anything in the sex industry. They step on this extremely hard. You cannot have a bank account. And now it's crypto and it's artificial intelligence. They're like, no weed, no women, no guns, and no artificial intelligence. So we know we're going to make money like a pimp. Excuse the reference, but it is coming in because AI is going to be huge. The breakout of Chat GPT and everything, it's on like Donkey Kong. Here's why. The new administration, JD Vance, with his connections to the PayPal mafia, this guy was brought in under Peter Thiel, the guy who owns PayPal. He's one of the original CEOs, learned about the investment banking industry in Silicon Valley, and they're getting ready to cut all the red tape. So this regulatory environment is about to completely shift over in favor of artificial intelligence and crypto. I personally own a crypto LLC. And they're like, yeah, it's almost impossible to get a bank account for that. They don't want it to go down. With this shift of regulation, just like we were looking at on the Bitcoin chart, the central banks teaming up with the government to end the bull market, now it's the flip side of the coin. They're getting ready to spearhead an amazingly, this will be a historic bull market. Congratulations to everybody who's in crypto right now, because you're going to make so much cash. This is like the 1990s .com bubble all over again. This is it. With the ETFs, BlackRock's getting in. They want to tokenize everything. When it's in the favor of the big dogs to do something, it's on. And we all know how dangerous crypto is. Kim Jong-un could put everybody's activity on the blockchain, and it could be used for evil at any time. We're already at $100,000 Bitcoin, and even the people who rely on the halving schedule to measure when the Bitcoin peak is going to take place, they're looking at November, October of 2025. Now, we debunked that by looking at the Tesla, GameStop charts, in part from my teachings from Roaring Kitty. I was in the whole GameStop phenomenon. This is an add-on that I did 14 days before GameStop ripped to the upside. Of course, Roaring Kitty went to college, was able to explain to everybody in the group the connections between the bond market stimulating these risk-on assets and how important that was for the short squeeze on GameStop. So while the Fed is engineering this bullish momentum, they're working hand in hand with regulation to start cutting away and making sure America has the leading artificial intelligent cryptos, hands down. And Spectral is about as American as apple pie. Massive upside. That was great to see. It was extremely disheartening when the FTX collapse happened. And there was a lot of people that got extremely bearish on crypto back then and might have missed buying the bottom. It's very easy when you correlate it with FOMC policy. The last time they hiked rates was right here. So we started our channel right here, knowing there was one last rate hike. Once they put that on, we entered a short, knowing everything was going to nosedive. Meanwhile, the rest of social media, they had such a good monetary policy for the last bull run. They're completely oblivious to this. Check out the majority of any stock YouTube channel. Every single one of them just broke down the FOMC minutes and started making trades off of it. This isn't some nuanced thing that I invented. This is what everybody's doing, except for the crypto community, because they had it so good last cycle. They just believe that their methods and tactics are working. And this channel has done, if anything, proven the importance of connecting monetary policy to your trading. It's an absolute game changer. Just look at Kaspa charts. Boom, boom, boom. So moving forward to this next massive event that's happening before the meeting on the 17th, the jobs data is coming out. And this is so crucial. There's been some lagging indicators that have been showing wage growth and part-time work. Those two data sets are actually indicating a weakening labor market. Going back here to the Fed report, you pull this up. The next meeting in December is going to be so huge because they're going to actually start to update the dot plot. And we don't have that. And when they update the dot plot, that's a big deal. That's the projections as to where the board thinks how much they're going to cut rates. No. And what the board's decision was, is there is a bull market now. It's on like Donkey Kong. What caused the last crypto cycle to be so bullish was these 0% interest rates that held down so long. The Fed stepped up and they've already decided we're going to cut rates down very low, right to about this level at least, and keep them down for 12 to 18 months. And that is enough to have the run up and distribution phase. Looking back at the total three. And we already know, everybody who follows this channel, boom, February 20th. What an important date, as that was when the FOMC started stimulating the economy. And it goes way beyond the rates. There's the quantitative tightening and the quantitative easing. Back to the minutes. They start talking about the quantitative easing and the quantitative tightening down here, and they're considering there may be some scenarios where they're going to have to back off quantitative easing immediately. And it's all coming down to this jobs data. They're saying instead of switching from quantitative tightening, which is what they're doing right now, the Fed is still in a restrictive economic environment. They're still taking liquidity out of the market. Again, this is why having a VIP tool is so important. This is very above the shoulders academic stuff. It's much easier to explain in written context with links and then connect that all to trading. The super cycle is when the Fed flips over. They halt the quantitative tightening in quarter one. And then by spring to summer, they start quantitative easing. And that will just send everything to the next dimension, neck-breaking upside that nobody can even imagine. And that's on the table. And of course, correlating this to our charting activities is what's going to help us be able to sell the top of all of these. We still have time to load a bag, and there'll still be some more trading to do. But the closer to the top that we get, the more it's going to start being leverage and swing trades. like with this render breakout that we had projected from way back down here at 5, doing add-ons to this and it coming up to that $9 level. You don't need to go crazy with leverage. 3 or 4x leverage gives you plenty of wiggle room, and you can get a nice upside profit off of that. All of AI is ready to rocket. The next up, DEAI. So we were just talking about the broadening wedge that we located on the total 3 chart. Zooming in on the 15-minute window, clear as day. That's a broadening wedge pattern if we've ever seen one. Now, we've been trading broadening wedge inside group. Here's a broadening wedge that we saw on Parcel. This is a real-world assets, benefits massively from the cutting of rates. Put it on the radar here. Some guys were loading up, and then we did the official broadening wedge call out just under 30. Getting some juicy upside here, and then another pennant. Pennants are becoming much more effective right now because of the level of bullish activity. Typically, we're waiting for these big, juicy patterns. 2 months, 3 months, like we're seeing on this symmetrical triangle on Tau. Or with all of these falling wedges from the previous. This was all based on rate cuts, by the way. Looking back at the total 3 chart, trying to find this. All right. Looking back at the total 3 chart, this entire falling wedge fundamentally is completely based on rate cuts. Powell was late to the party. He didn't start cutting rates on time, driving all these altcoins down. And as soon as he did, the moment that he did, ripped to the upside, which is how we were able to get everybody in VIP in on these juicy swing trades. Obviously, Moonwell, one of the best, hands down. It's DeFi. It saw a lot of downside and upside correlated with the total 3. DeFi itself is almost another version of the total 3. That's how we were able to get everybody in at Moonwell at a price lower than anybody else on the internet. Congratulations to everyone who saw value in Moonwell. But buying that swing low, that really down and dirty price, it just pays off so much. It's almost, you can't even compete with it. Scrolling through. Here we go. All of these billion-dollar top 100 cryptos were all doing this exact falling wedge, just like the total 3, and it's the exact same fundamental driver. And you can bet your bottom dollar that it's this fundamental drivers, monetary policy, quantitative tightening, quantitative easing, interest rates of bonds. This will give the signal for when to sell. Hands down. Now, with specific cryptos, you got to really hone in because now there is on-chain data. But on the total 3, we'll be able to pick out the altcoin market cap peak as a whole almost flawlessly by using this, as we've discovered the bottom and bought it multiple times and breakouts. So this was our original render scoop. And did you guys notice what happened with AVAX? This is Solana. And we got to talk about Solana because Solana's got some issues. Great project leading. The market cap has doubled, but the price hasn't. The price is still at all-time highs. And this is because it's massively inflationary. So the AVAX trade, scooping in AVAX under 25 bucks, that's a great one. The reason why we did this add-on for render was both the AVAX and render chart had the almost identical classical pattern, this falling wedge with the wick off bounce to the side and then upside. And they both had this condensation where they're collecting right here halfway through the breakout, because every falling wedge will yield 150 to 250% upside. So with Render, we're looking at AVAX, which was the front runner here. It went from 36 to 44, and we're thinking we got an add-on here at 777. We got an add-on here with leverage, and we are right at the this level that we established back when we were at $5, that $9 resistance, and the next pop up is 12 and a quarter, and it can come on jobs. This is going to be huge, you guys. December 6th. It's a Friday. This is the last chance to start loading your bags in projects that are going to run on rate cuts. In the scenario, this jobs report comes out, and looking into these lagging indicators, wage growth, part-time jobs, it is going to be good. The jobs are going to be weakening, which means the Fed has to stimulate the economy. This is getting Kaspa ready to rock and roll, getting Kaspa to start beefing up. So we've already gone over multiple technical analysis on Kaspa. There's key levels, psychological and technical. 18 cents. This is massive. Once we cross 18 cents, it's on. 20 cents will no longer hold us back because of this Y-axis right here. The original Y-axis, this is the repeating trendline system. For any of you new to the channel, we use this on Tau, use this on every chart. We just use this on Spectral. I'll show you on Tau first because this is pretty funky, and then we'll break it down on Kaspa. So we posted this angled Fibonacci pitch, and this is all because of the emission and halving schedules. All of our charting tools, techniques, they come from the stock market. Crypto is a completely different animal because of the halving and emission schedules. It creates these repeating trend lines. So right here on the 19th of September, we post this Fibonacci pitch. It bounces off the golden pocket, finds resistance at the next level, breaks into the gray zone, starts bouncing off the top side, and it's been using this X-axis repeating trend line over and over again. How we got that angled Fibonacci was we cloned this one that we had already had on the chart. We just cut, copy, paste, cloned it. And we were able to make correlations when it was right here at the gray zone using other indicators that we'll jump into in a second, known as stochastics. It's an RSI oscillator. Amazing stuff. Almost a back door into momentum. We were able to realize it would jump up to the blue zone and then find resistance. Jumped up to the blue zone, found resistance. See this downward price channel? It's the same price channel over and over again. See that? It just keeps repeating itself over and over because of halving and emissions. On Kaspa, right here off of April, the handle of the cup, this downtrend, and this one had a really wide berth to it, but the exact same thing. And of course, using these, we were able to make these almost uncanny crystal ball callouts on the Kaspa chart. Recognizing while everybody was like, we got to go long on the KRC20, that this was undoubtedly a short sale. Using that before the candle even approached it, we were able to recognize exactly where that X-axis line would be at 18 cents on September 18th. You see that? At 18 cents on September 18th, gets rejected, finds downside, and this is where it gets spooky. And this isn't me doing this. This is the system. This is a standard operating procedure. We had predicted on the 9th when it was way back here and all the Peach Fuzz Mafia was saying, you got to load the bags now. We were like, oh no, dude, you're going to get everybody wrecked. That's why they all fled Kaspa. We were saying October 30th, it'd be 12.5. And for a prediction 50 days away, pretty close. Eerie with accuracy. So it's an awesome thing. You can use it on any chart. We just did it on Spectral, saying once we get this original, let me move this Fibonacci pitch out of the way. See this purple trend line? Resistance, resistance. Let's get this wedge out of the way. And then an access support here. Very clear trend line. That's a repeating trend line. It's the best trend line we got, so we see it repeats. We said this in the live stream. We said the next time this price gets above this, it's going to jump all the way to the blue zone. And people were like, yeah, okay. All right, you're a Looney Tune. But we make these insane call outs, and then they keep hitting over and over again. And it's very important to connect your call out with technical analysis and fundamentals. It's one of the most important things. So we actually built another tool based on all this success that we had off of the rate cut swing trades. We just put together another checklist. 5 key elements of a swing trade. It's like a checklist. You just go over everything before we enter a trade, making sure we've checked our indicators, our classic patterns, our fundamentals, our monetary policy, our social media activity. We just check everything. Just like the 24-point checklist, which is how we discovered all these massive gems that became the absolute leading swing trades after the rate cuts popped off, exactly like we predicted. That's good, dude. Congratulations, man. That's what it's all about. I remember Roaring Kitty when GameStop was ripping, was just like so filled with joy, like Santa Claus. And he was like, see, I told you, like it's all connected to this and look at these charts. And so to be able to share that and help people make money is just so touching to me. It's really great. So back to what's going on. The jobs report is coming out, and this is heavy. This is big. Hopefully, the prior administration, they can't influence the FOMC. These guys are untouchable. Trump can't fire Powell. They can do nothing to them. But the boards that are going around and collecting this type of data, they might have had a hand in a cookie jar, and they were able to, through creating a lot of government jobs, which they did, which helps us skew. There's like non-farm jobs. This stuff, this rabbit hole goes so deep, you guys. You can go to college for this, and you're still just learning at that point. There's a great chance that this jobs data will be showing a weakening economy, which is what we want so urgently, because this will cause the investment banking class to start buying more heavily on crypto. Now, looking at Kaspa, remember this x-axis repeating trend line? You can zoom in a bit more here, get some detail to it. This one had a really wide berth. Usually this x-axis resistance is much tighter. Because it was such a wide berth, we knew there would be way more downside. But notice this golden pocket really acted as a strong resistance. And here's something very interesting. When the golden pocket intersected with the y-axis support level from the bottom of the cup and handle, this being the first y-axis ever, back in our original videos way back in the day on this symmetrical triangle, the Fed's cutting rates here, so we're waiting for Kaspa to drop while we're short AVAX, and we're just going to load the bag in the right scenario. And we get in the right scenario, we get the read on the FOMC meeting, and we just load the bag at 2 cents and under on Kaspa. Pig out, get like $1.5 million for like 25, 30,000 bucks. It was as this y-axis trend line that repeats right here intersected with the golden pocket, that was a huge apex. and a no-brainer to open a leverage trade. There's loads of guys inside VIP that off the gamma support 10-cent level, they were pigging out on extremely high leverage degen stuff, and they completely got away with robbery, and they're still holding now because upside is on the way. So looking at candlestick formations, which is what we've been getting a lot of success with, we can see off the last breakout, what do we have here? A lot of these cup-like formations, a lot of rounded bottom cup-like formations. That's bullish for Kaspa. And it appears like we're getting this rounded bottom cup formation. This trend line right here, that's the original y-axis, is very key. It also was support during the ETF pullback, shoulders to this head and shoulders. We use this to buy cold storage on the last downtrend and to enter when we got after the gravitational field, leverage trades here. That ripped. Once we get back up to these levels, there's some key levels here. Zooming in, getting rid of this Fibonacci channel to see more clearly the horizontal effect right here. This was that big drop off right at 16. That's also a round number. Round numbers very key, especially as the bull market rips off. We get above 16. We're not only on top of that psychological level now.
Exciting now.
We're also on top of the first y-axis support level. And the key mark to pass is 18. 20, we're going to cut through like a hot knife in butter. Why? Because this exact same y-axis, using the angled Fibonacci tool, like we did in the old videos, like we were doing on the Tau chart and the spectral chart. There we go. We had this all lined up. This is like the maximum contact points, golden pocket, very strong. This is in like 1.5 year old videos. Look what happens when it breaks out to the upside. It starts using the top of that Fibonacci channel as resistance on the exact same repeating trend line. And so the last 3 attempts at 20 were actually at an angle, and they were really contact with the y-axis. This time when we get to 20, the y-axis is way up at 25. So we're just going to cut right through that. Mike, what's up, man? It's more complex than that, Mike. Let me break down some VIP stuff for you and show you what happened last cycle. Of course, as this unfolds, this cycle, it's going to be a different beast. It's not going to be the exact same thing, but it will be similar. So let's scroll back to when it all ended last cycle, right here, November 10th. The FOMC meeting was on November 3rd. So Powell gets up there and he's saying, this guy right here, macroeconomic trends. And he's like, oh yeah, we're going to raise the rates by 25 BPS. But the more important thing was, and this is part of what they discussed in the minutes, is the quantitative easing. Another thing that we do inside VIP is we track bond auctions. Kind of sounds weird. Here's one right off the back. These were extremely effective. And what we're doing here is we're actually just doing the accounting of quantitative easing. And it's actually tightening right now. So these were very effective here. August 26th, because this was the last call at buying these government treasury bonds. We're playing poker with the big dogs here. These guys have stacks of chips. They can take $20 million, buy a bond from the government, and they're guaranteed 5% in a year. That's gravy. And part of it is just to defeat inflation. So this is the last round to buy bonds. Obviously, they're pigging out. And we pulled up a bond auction for August 26th. This even affected Bitcoin significantly. August 26th, right? Where was that? Right here, August 26th. See that? Bonk. So we made this connection through tracking the quantitative easing, but big picture, this is how it works. You've got to be honed in on the quantitative cycle, and there's other charts for this. We're not going to bring them out in this video. What happens is this, Mike. So they're doing quantitative easing, which means instead of the Fed's buying bonds off of BlackRock, that's quantitative easing. So right now, BlackRock's buying bonds off the Fed. This is to fight inflation. As the Fed is selling BlackRock money, they're playing monopoly banker. All right. And they're holding all the cash. So there might be a lot of cash printed, but it's not on the board game because the Fed's got all of it. That's quantitative tightening. And this is scheduled to end right when 10 BPS goes on. And as we've seen in all the Kaspa charts, the team, they know about this stuff. They're smart. So did DEAI. Remember? They're getting all these big listings ready, knowing that there's going to be rate cuts coming up soon. So everybody who's talking about Binance, in my opinion, based on Satoshi's secret, Roaring Kitty's teachings, what's actually the real catalyst is the ending of quantitative tightening, which will take place in Q1. That means that the government is now going to stop selling bonds, taking money in, and now quantitative easing, which they can or cannot do later on this spring, this summer. And this will create a super cycle. This is what they did in the last bull run. This is why nobody pays attention to this stuff, because everything was on full blast nuclear mode. The FOMC starts to buy the bonds off of BlackRock, off of this guy on the Joe Rogan podcast, Anderson. He's at the poker table with us. You can find him backing tons of AI cryptos right now. He backs tons of crypto projects. They're giving these guys cash off the monopoly board to put into the economy because they need to make sure there's jobs, stimulating the economy. And this obviously goes beyond crypto. It also goes into the stock market. Companies like Boeing, Mickey D's, everything like that. So the last cycle, right here at this meeting, they raised rates and they said, we are done quantitative easing. Right there, they stopped. And that's the signal. They're all playing poker. The central banks and the investment banking class, that's why this guy's doing meetings in the White House. These guys are all poker buddies playing against us, the miners and the whales, right? And once these guys get the signal, they're dumping everything, knowing that it's coming. And it's coming because next comes regulation. So right now, it's the exact opposite of this massive downslope, but in our favor to stimulate the market and get everything ripping and roaring. Because Powell waited so long, enhances the chances of it being a larger bull market, meaning that Bitcoin can hit a higher peak. There's only so high Bitcoin can go in a certain time frame until you get back to these old repeating trend lines. Like it can't get above 200,000 unless the peak of the bull market isn't until February of 2026. The longer it goes on, the higher everything can go, the more the FOMC can stimulate everything. And of course, we've got to correlate this into on-chain data too. Different projects will run at different times. Bitcoin's the first to peak. Yeah, Merrill. Sorry to hear that. You'll get through it. You're a strong guy. Take a break. It's good. You know, just stop looking at the charts. You got your bag packed, everything strong, and then just, you know, refresh, recharge. Don't look at any charts, though. Actually, personal story, on Thanksgiving, I was like, all right, I've been looking at the charts every 15 minutes of every day for the past 700 days. I'm going to not look at the charts, enjoy time with my family. And then I turned my portfolio back on and Spectral had ripped to the upside. And I was like, yes. So it's great to do. And your bags are packed. Everything's going in your direction. So yeah, take a break. It's and recharge. We'll know when the bull run's over. It'll be clear as day that the Fed will start to halt things. Now, there's lagging indicators, just like this jobs report is coming out. December 6th, the jobs is happening. There's lagging indicators onto when they're going to start to end the bull market. And this is warehouse and supply chain type of data. Once things start to get overpriced, once inflation sets in. Spectral is set to continue breaking out. Now that it's at these new all-time highs, looking at the stochastics, this is like an RSI that oscillates. Looking at one-day stochastics, we're still not even to the top of the gauge yet. So there's still plenty of upside on this. And then, of course, DEAI, which is another 24-point certified gem. It's got this monster. It's almost got like two broadening wedges. One here matching this one, and then like another one inside of it, just waiting to break up to the upside. We're obviously all ready for it to happen on the 17th. It can happen earlier, over the weekend, once jobs comes out. Speculating into what created this upside here, from the 24-point report, we know that these Silicon Valley giants are investing heavily in Spectral right now. I believe that the stock market was closed Oh, yeah. So the stock market's closed, which means that these VC investors that we've outlined in the 24-point checklist, they're the guys that are buying Spectral right now. You notice how it's so choppy? It's barely on any exchanges. Meanwhile, Spectral works hand in hand with Aerodrome, that DeFi project. So this is a setup for a Coinbase listing. Absolutely. This can get on Coinbase with ease. This can really, really take off and start flying with the quantitative tightening and everything. Once they switch over, like we have outlined in the 24-point report, once they start actually marketing this on the roadmap, getting it available for retail, it's just going to go bonkers. Nice one, Red Pill. Nice. That's good. You got good liquidation there. Yeah, I mean, we're at new all-time highs right now. And looking at this from a technician standpoint, this is a giant flagpole. Particularly with all the huge catalysts that we have coming, jobs and FOMC, with the rate cuts, we're looking at continued upside here. Maybe it'll create a falling wedge. Maybe it'll just keep running again. Maybe it'll create more of like a cup formation. But anything on top of a flag formation affects the outcome. As we have in the, this is another one of the printouts going over all the classic pattern formations. And one of the DEAI is a great example of this, actually. So this is a bearish setup on a broadening wedge, which averages different outcomes statistically than a bullish setup on a broadening wedge. And we detail all of that in that particular printout. So a lot of stuff to add to the trading journal here. Yeah, we're going to, first off, we're going to do DCAing out, particularly with Kaspa. Kaspa is our largest bag for the majority of people inside of our VIP group. So we're definitely going to want to DCA out. Now, we've been going over some calculations and math regarding different scenarios using the computer to find out the most effective amount of times to dollar cost average. So we're going to use every shred of data from FOMC, every technical analysis skill that we have. But on top of all of that, there's still an element of chaos to it. So having a math-based system is really strong. And this is one of the reasons why consolidation is a favored method to diversification. I'll give you an extreme example just to contemplate. Let's say that you have one pick that's going to do an average upside of 20x, and you're going to dollar cost average out of that 4 times. Now you have 4 picks that are in total going to average 20x each, and you're going to dollar cost average out of each one of those 4 times. You'll get a 15x on average out of your consolidation versus you'll get a 10.5% on your pick 4. So the more you're diversifying, the more you're exposing yourself to, of course, human error too, especially once you're getting more than 10 charts. I mean, tracking all of that fundamental information, it's a handful for anybody. So consolidation definitely favored. And we're working on the best model right now using that type of math with AI to figure out how many times we should dollar cost average out, roughly, to get the perfect exit plan. And yes, we'll be able to, using the lagging indicators, just like recently inside VIP, we've been able to get lagging indicators recognizing when the minutes get printed, this would be the end of the discount on Moonwell. And we weren't expecting a massive breakout here. As we detailed in the post, we were just saying the discounts were going to be over as soon as the minutes come out. And they were, because we looked into the lagging indicators. And so we'll be constructing new models based on supply chain data, the lagging indicators for inflation when the bull run is up and running. That way we can get ahead of the curve as the FOMC data starts dropping. We'll be there. And there's so much growth and development ready to go on Kaspa as we speak. The KII is out there funding projects to get an ecosystem around Kaspa. They're going to release gigawatt stablecoin, and that's going to be a game changer. They have 2 teams ready to hook Kaspa up to smart contracts on the Ethereum virtual machine. We were just talking about all of these classical patterns. Look at this one on Kaspa. We got a gigantic we got a gigantic broadening wedge. We were just talking about how the broadening wedge is a bullish pattern that's coming into play right now all over crypto. The next time that price gets up to the y-axis, it won't have that paired psychological resistance at 20. So 18's our biggest blockade. 16, 18, and then it's the moon. 20, we will slice down like an anthill with a magnifying glass. We're just going to go through that and get right up to this y-axis. And that's where the big breakout happens, because this classical pattern, where's that parcel trade? We just had a broadening wedge on parcel. I can't find it. It's about to happen on DEAI. So we'll be able to see a broadening wedge in real time, break to the upside before Kaspa gets ready for its massive breakout with DEAI. We just saw it on parcel too. So the yield on a broadening wedge is 100% on average. I always check the classic pattern printout. The classic pattern directory. I've got the printout right here, actually. This is great. This is all real-time patterns as they're unrolling. Like the BOJ carry trade. Stay on your toes, because the BOJ is geared up to do that again. It was making a head and shoulders. That could go down at any time. That's a surprise attack, you guys. So just be ready for that. Yeah, the broadening wedge in a bullish setup does 100% price gain. So we'll go from 25 to 50 on this breakout from the 10 BPS. This is a great time to swing trade Kaspa. This is a great time to dollar cost average in, because Kaspa's set up to run. Let's take a look into some real world assets. Kaspa itself is also geared up for real world assets with carbon credits, and they're linking everything to these electronic fields all in the Middle East, hand in hand with the KII. So there's a real world aspect the Kaspa is going to be used for with the gigawatt stablecoin and whatnot. So Goldfinch, this was a leading project from the prior market cycle, if my memory serves me correctly. Let's look up the big chart too. All of these lending type of things are super bullish right now. And we'll get into why in a second here. Let me see if I can get this chart up and going, the whole chart. GFI, USTD. Yeah, no, they're cutting it off. But I've seen this pop up as a leading project for the last bull run, if my memory serves me correctly. This downside correlated exactly with the total threes sell-off. The upside hasn't really been going with rate cuts, which is something that we want to see. When they're cutting rates, we want to see our projects start to stir up, start to kick up some dust and get moving here. But on the September 18th, yeah, it didn't even really get going that much. This is actually seed funded by this guy right here that was on the Joe Rogan podcast. He seed funded this with his VC firm, Anderson Horowitz. So that's on the plus side right there. They have good VCs. They're linked up to Coinbase Ventures. That's a plus. They're on Coinbase. Let's see what they do. Borrowers currently off-chain lending businesses propose deal terms for credit line borrowing pools to the protocol. goldfish community of investors can then supply capital for these credit lines, either directly to these individuals as backers or indirectly by automatically allocating capital across. Okay. So we can see exactly in this first paragraph, why did this not just run on rate cuts? This project is almost a hedge against the rate cuts not going down because we're borrowing money here. The thing is, as the rate cuts continue to drop down and cut, they can just turn around and get money from a lot of other places for cheap. These borrowers, businesses use their credit lines to draw down stablecoins, specifically USDC. They then swap it right into fiat and put it in on the ground. In this way, the protocol provides utility of crypto, specifically its global access to capital, while leaving the actual end borrower loan and servicing to the business best equipped to handle their own communities. This is going to require a lot more research. I'm not going to be able to give you a really great review of this without really digging into it. I'll tell you where you want to start checking off the 24-point checklist. For one, right off the bat, you need to go to step 13 and you need to start checking out who is using it. Their strategic partners, their actual use case. Actually get onto that web page and see how to borrow money. Is it something you can do? Do you have to fill out a lot of paperwork? Do you have to connect your bank account? I would go on there, try to get a loan for $1,000 right now. See if you can access it or what kind of hurdles you need to jump through. Use Agent GPT to start figuring out who's borrowing money off of it with questions like this. Start gathering some research, start going down these rabbit holes of strategic partners. The candlestick formation, I'm not really seeing a lot of upside there. The chart does not look bullish at all. Based on our trading journal, all right, so this is a relatively new listing. And it came all the way down from 15. Kind of looking like seeing all that downside, all the TGE there. Of course, they entered in like the worst time of the market too. This was right around when Kaspa got listed, way back in no man's land. It wasn't exactly a bullish opportunity. I think you could probably find better real world assets. This right off the bat, the chart isn't showing any signs of an upside. Reviewing our trading journal, all the breakouts that we've had with any success have all shown very specific classic patterns, being a pennant or a full-blown classic pattern. And this, I mean, you could attempt to make some kind of a falling wedge out of that, but it just looks like something that's sold off. The VCs made out like a bandit. I'm not seeing monster value there or upside. Part of the vetting system that we just put this through, the specific techniques that I use connecting to Roaring Kitty's secret, one of the absolute go-tos is we need to find this connection with a project to the bond market. This is a very specific technique. Goldfinch could have some value. I'm not seeing it based on the techniques that we use connecting it to the bonds. Like for Kaspa, for example. Kaspa has enormous connections to the bond market, showing us investment banking interest. The rate cut just went down and this didn't see any upside, and it kind of makes sense when you're looking at the narrative because they're competing with the banks. So I would say it's a no-go. It definitely doesn't have that connection that we're looking for, that I personally do for 24-point gem hunting. You might be able to discover some value deeper, but using this particular method, it's a no. Parcel's an interesting real world project. It's been seeing upside from the rate cuts, from the altering in regulation. We've been doing some call outs on this from the broadening wedge pattern that it was forming as rate cuts were taking place. From the falling wedge right here, we got another buy alert in, I think, at 36 cents, signaling that this downside was here. This is also Coinbase Ventures, but it's not listed on Coinbase yet. The thing with Goldfinch, it looks like the VCs made out like a bandit there. You see what I'm saying? It looks like with the token unlock, the TGE, and the actual use case that they were getting money out on the street to some businesses, found a value in that. But the real payoff was them just facilitating it so they could get rich. It's not necessarily, I mean, the run's pretty much already had its go. They already got rich. People have already stuffed their pockets on that project. I mean, it opened at 15. This is a great question. So here's the deal with the BOJ, and heads up to everybody in VIP because we've got the articles covering this. So the Bank of Japan, they're going to hike rates. It's not a question of whether or not they're going to. It's going to happen almost to a certainty. Now, there's been some political conflict in Japan, and it's looking like they're going to delay, and it will not be in December, but it could be positioned for January. It won't break out of its broadening wedge pattern because we still have the, in the worst case scenario, yeah, we're not going to get back below this y-axis support again. There's no way. After this bounce off of here, when the golden pocket interjected, we're now over the x-axis. A lot of the edge of the BOJ crash right here has already been taken off. So this was like a surprise attack on everybody. Now, a lot of these like the whole bond borrowing money that they use with Japan, basically shorting the yen to then get money, kind of like the Goldfinch project, and then run over to the US and invest it. A lot of that's been taken down a notch. So it won't hit as hard even in a massive crash anyway. It won't nullify, no, it wouldn't nullify the broadening wedge. It would just be a wick down with a retrace market wide. It's not like the BOJ only affects Kaspa. It's something to take a look into, the Bank of Japan. There's a few documents that you can pull up. It might just be a bunch of fluff at this point. They might be able to push that back. It's depending on economies, things in this nature. The U.S. can stimulate Japan in a lot of ways to avoid that by cutting rates. So we'll see. Paul with a great question. I know that XRP is ISO 222 compliant. Let's see if ADA is. No, it is not. So a lot of these recent runners, XRP particularly, they're ISO 222 compliant. This is the secret sauce of XRP. It means that they can officially do bank-to-bank transfers. It's a big deal. And it's pivotal for the KII's work. The KII is an enormous business entity which founded the European energy trading market. So there's an entire stock market that's running under Paul von Sant. These guys are a huge deal. And they've already registered Kaspa. So they're taking care of all the business work. They've got Jonathan and the guys doing all the coding, doing all that heavy above the shoulders nerd stuff. These guys are handling the business activity, and they got the bankroll and then some, because BRICS is rolling with these guys. Absolutely. Kaspa positioned to do something very similar to that, just like Spectral did something very unique with it. Here's the thing. These guys want sure things.
Darts at a board sport. I don't throw darts at a board. I bet on sure things.
So with ADA, massive rip to the upside. What, do you think this was retail? Right? You think this was some rich guy out in the Caribbeans buying ADA? Who was buying ADA right here? Investment bankers. They put their own 24-point checklist in play. They're looking at the dot plots. I'm trying to bring up the dot plot articles from the September meeting, and I'm not getting nothing here. I'm getting these letters. Yeah, weird. But they're looking at all this FOMC stuff. Another way to look at it is on this chart. They're going to cut rates. They're going to hold rates down. Meanwhile, they know that there's tons of openings in the entire choke point 2.0. This was something the Obama administration was leaning on massively. They're illegally choking off legitimate businesses. I own a crypto mining LLC. You can't get a bank account. They're like, yeah, well, we can give you a bank account. You just don't deposit anything onto Coinbase. Don't even think about cashing out on Coinbase in this account. Can you imagine? I mean, it's ridiculous what they're doing. This is what they do with drug dealers and gun runners. And they're doing it not just to crypto, but to AI as well. So with the ISO 220 thing and XRP's monster run-up, they're ISO 222 compliant, bank to bank. The KII is setting Kaspa up for this right now. This gigawatt white paper is going to be huge. They're leaking info to me to give to you guys. So get out your pens and paper because it's 007 James Bond spy time right
Exciting
now.
now.
Everybody knows that Jonathan Saplinski was supposed to do the smart contracts on native chain first. Just to get you guys up to speed, if you're more new to crypto, the smart contracts allow you to play video games, do all the cool stuff on crypto, not just transactions, right? We know crypto's like an accounting form. This allows you to make video games, do cool stuff with it. There's two kinds of smart contracts you can do. Solana does both. Solana does native smart contracts. Solana also does Ethereum virtual machines. Matic, projects like this, their entire job is to connect to the Ethereum virtual machine, to give projects more depth, etc. The KII has two teams of coders with propositions on the table to put Kaspa into the Ethereum virtual machine now. ASAP. The gigawatt white paper. So as the whole quantitative tightening backs off, that's what they're waiting on with the Binance listing, etc. Just like on DEAI, these guys know all about this type of stuff. Like we were talking about in the intro of this video, once they start working with the monetary policy to get everything moving in direction, the next thing that comes out is regulation. Then the regulation starts going in our favor. This is exactly how the bull run ended last time. First, it starts with central banks, monetary policy, then it goes into regulation. So what we're seeing with the ADAs, with the XRP specifically, the ISO 220 compliance is running not just based off of the monetary policy, which is favoring crypto, but even more so this regulation. This is actually a great question for this live stream because of choke point. This dude that was just on the Joe Rogan podcast, Anderson, he's one of the VCs that backed that Goldfinch project we just looked at. He's talking about he's in the White House with a bunch of tech nerds, and they're telling him, yeah, don't even bother doing a single startup. You want to know why? Because we're not going to let it happen. We're going to shut you down at the government level like we're communist China, and there's going to be like 2 or 3 companies. That's it. This is choke point 2.0. Obama was doing this to regulate marijuana, tobacco, guns. It's an illegal way to shut down legitimate business. It's government overreach. And of course, Trump's the front guy, but it's JD Vance who's in with these guys. He's been trained. He was the guy who put the proposal on the desk. You guys heard they were getting ready to fire Gary Gensler and Biden vetoed it. The VP is the guy who put that bill together. So he's like a knight in shining armor for crypto. Absolutely. He just is. So yes, Kaspa is going to see some breakneck upside. And I'll just give you a store example of this. All right, we're seeing it over and over again. From here, Marathon Digital starts mining here. Very funky price action here. This is when we scooped up Kaspa, gave us a hint that there were big dogs at the table, that it had a connection to the bond market. Otherwise, we wouldn't have went in. This is like a roaring kitty pick 2.0. That is my GameStop buy, and I was rolling with Wall Street's bets car. I chatted multiple times, one-on-one with Roaring Kitty. Cool guy. I can't believe they made a movie about that guy. See these massive upsides? This was huge. This put Kaspa on the map. There was an FOMC meeting right here. You can go back and watch we did a video on Kaspa smart contracts right after that FOMC, and we said, this is it, guys. 10x leverage trade Kaspa right now. 72 hours later, it rips up like this. Everyone's like, dude, you got to do a VIP, man. You need to have one. So we opened one at the next FOMC meeting. Boink. So once these guys, the same guys that drove ADA to the moon, the same guys that rocket shipped XRP for the same reasons, KII is going to get Kaspa the ISO 222 compliance, which means they do bank to bank. Bank to bank. That's big time. A lagging indicator here is smart contracts for Kaspa. Once those happen, even Ethereum virtual machine smart contracts, this opens the door for so much more for Kaspa. ISO 222 compliance, they're filing for it right now. This is information that was leaked to me from the KII. They're redrafting the gigawatt white paper right now. They're bringing on new board members that are hooked up in the energy industry. Going to be huge. Mike, I would go for Parcel hands down. Parcel is something that we have on the radar inside VIP. Let me show you the technical analysis on Parcel. What's been going on? So we're seeing this rounded bottom formation. Let's connect this all to the total 3 because we want to look for matching stuff. Remember with the Solana render breakouts, they're all showing matching classical patterns. So we got a broadening wedge, full pattern. We put this on VIP spotlight here. And then we did the trading plan just under 30 from the broadening wedge breakout. We got this. So we get this falling wedge. This is just a pennant, but we recognize that this is going to break out at 36. So we told everybody the last trading plan in VIP for this one was buy here. And then we've been talking about, well, should we do profit or should we roll it? And we're rolling it because it's not done yet. So this is that spectral, the last spectral call out. Big check here is the 1-day stochastics were checked back, which is huge. And the same thing on this. So we're seeing a pennant, and then here's a key indicator that we use, the stochastics. And we're getting a full 1-day kickback on this. This is like an RSI that swings like a pendulum. So now it's upward momentum. Let's see how this oscillator is right now on the 1-day chart. Okay. So it's seeing a top. It can continue from here. Just because it's at the peak or near the peak doesn't mean it's over. It can often and will often continue to form more highs. On the 4 hours, we're getting closer to a low. I would go with Parcel for a real world assets, hands down. It's got a great chance to get listed on Coinbase too. As rates go down, you're investing in two different things here. Actually, I think a better comparison, Mike, would be, because we're talking about borrowing, it would be more like Goldfinch versus Moonwell, because they're borrowing and lending in a different aspect? Or how about Maple and Goldfinch? Because those are about borrowing. They somehow snuck Goldfinch into real world assets. This is a solid real world assets because we're seeing all the real estate that's connected to it. So as the rates come down, super booming for the real estate market. This is something else to invest in. I own shares in a REIT out of state, not publicly traded, just a huge collection of apartment buildings. It's a whole different aspect of the business and something we wanted to shift towards after we're done profit taking. Once the bull market has kicked off, instead of getting everybody into mining, which I've done personally, it's a pain in the butt. It's extremely hard to make money off of. It's a hassle. And we can make way more money in real estate. And with the kind of cash out, we're talking about life-changing, empire-building money here we're going to get off of this bull run. This is going to be huge. We're so early. Start rolling into the real estate market when we can get everything on a swing low. Green Man, great question. So these parabolic pumps, like the FOMC meeting Kaspas or Spectral, this parabolic pump that just took place on Thanksgiving, ADA and XRP, this is when the big dogs like Anderson, this is a specific VC. Is it a VC of this company? Maybe. No, but this guy invests in tons of cryptos. This is when the investment banking class, they're buying. That's what creates that monster rip. They step on the gas. That's why the study of monetary policy, FOMC data, bond rates, the actual treasury bond balance sheet is what we focus on this channel and inside VIP. Because this is how we get additional insight into this. And the more experience, the more long in the tooth you get to watching FOMC meetings, understanding monetary policy and how it connects to the market, the more epic trades you're going to make. Even with these, like this Moonwell jump. No monster move to the upside, but we correlated it directly to FOMC data. And we knew the entire time it was just going to be a loss of a discount as the minutes came out. But this jobs data is going to be huge. And the jobs data is something that can create more parabolic action because the investment bankers, they don't throw darts. These guys have their own 24-point checklist system, and they need to have everything covered. So once Kaspa gets smart contracts, specifically Kaspa, they now have everything covered, which is going to create massive upside. 10 BPS is another one of those awesome things. Yes, TARS is great. Another interesting project that's similar to TARS, but more like a Moonwell is this. It's a Solana-based Moonwell. Very similar with TARS. Now we did do a call out on TARS. We never ended up fully vetting it with the 24-point checklist, but we did have some kind of heightened awareness on TARS, some sort of a post about keep your eyes on TARS. I'll bring it up and show you guys later. It's a strong AI project. Solana is really hot, has a lot of activity. And so TARS has a lot that it can inject itself into. Big volume. This is great to see. Look at that volume. 30 million. That's great. Oh my gosh. Look at the volume on Spectral. 142 million in volume. That is deep. That is deep. Spectral can stick its hands in more pies. I still take Spectral over TARS. I think DEA versus TARS, much closer race. I'm still leaning DEA. The fact that it's all on chain limits it also to a certain extent. On the 6th, Kaspa is set up to start pumping on the 6th. The jobs data is going to come out. This is very similar to FOMC. And in the right conditions, which looking into our lagging indicators, wage growth and also part-time employment, it looks like the labor markets can be weakened. And that's exactly what we need, because as long as we see a poor jobs data, this will force the Fed to cut rates. Therefore, the investment banking class, which is who we are copy trading, we're playing poker and we're waiting for these guys to get aces, basically. You know, we're keeping our eye on everything they do. They'll start buying, which will get more upside significantly. And if it's not the 6th, which it should be the 6th, the 17th is the next FOMC meeting, and they're set up to cut rates. But I think we're going to start crossing the $16 mark right around the 6th. So we're about a week away from the next big catalyst that can get Kaspa going. And once it's 18 to the moon. 20 is not going to stop us. That's why this resistance is so strong, because once we get above 18, it's just gone. I mean, who's going to sell at that point? Volume range finder. This shows us handy indicator. Depending on what time frame and how we zoom in. Let's zoom in more. Here we go. Let's look at since here. So we can see, oh yeah, the majority of the buying and the selling is happening right at this level. Also, a couple notches above. So once we get through here, now all of a sudden everybody's in profit. Very minuscule amount of people bought here. So there's no longer any trapped investors. Trapped investors can become a problem. Even with the greatest projects. Let's take a look at Myria. So this is something that we can bring up because it's going to help put everybody's nerves at ease. Great tool to use on Myria. Is this volume range profile finder. Because we're seeing, aside from this downside right here, lots of buying here. Otherwise, the majority of buyers are between 9 and 12 cents. You remember when GameFi was super popular? It was like GFAL Lit Labs. Way too early to invest in gaming. When you start correlating it to FOMC data and bond rates and the historic gaming performance from last cycle, GameFi is the last sector to go for. So once the run-up phase happens, this is when Bitcoin's going to be at its top dollar, like 150,000, something along those lines. Let's look at AVAX, which is a great example of how this goes down. After the run-up, you get a sell-off. right? That's when Bitcoin peaked. That's that February 20th date. This is when all that bond money's pouring into risk on assets. This is when GameStop started peaking, like 2 weeks later. GameStop starts ripping. You get this sell-off, and then you get the real top comes in. Depending on how on-chain data and monetary policy is playing out, this is what we're going to see on Kaspa. We're going to see a peak, profit-taking sell-off, and then another higher top. We'll see this with a lot of altcoins and layer ones. With Myria, because there's so many investors that are trapped up at 10 to 12, once you get the run-up phase and then the sell-off from profit takers who are going to be the early investors that are stuck, just happy to get their money out finally at a profit or break even, now buy in on that inside the bull market. You see what I'm saying? After the run-up phase. Get rid of these guys. It's a great late game purchase that can still see massive upside for portfolio balancing. Something like this definitely can take place for Kaspa. That's why we're building all these models showing us the most effective, and there's a whole range. This will be more risk on, this will be more risk off. How many times to dollar cost out? On top of all of our monetary policy and technical analysis put together, we're still going to be aiming for, 3 to 8 dollar cost average sessions. And the run-up phase is going to be one of them. We can take some off on the run-up phase. This will help put everybody nerves at ease when that sell-off happens afterwards. Just help everybody relax and wait for the real top to come in. You can even redistribute and buy it back on the swing low. Yeah, don't be afraid to dollar cost average too. Strong picks like Myria, now's a great time to add on to that. Bring your average down and more actively trade it. Become a bit more active into it. Dollar cost averaging is down is super key. Like with DEAI, we had originally picked it up as a new listing around 60, 65 cents, and then it got completely whacked. The team had to step up and change the tokenomics and stuff. But from dollar cost averaging, when we're down, you get super upside as it regained these all-time highs and is now back on track to compete in the market cap where it belongs. They had issues with the tokenomics and the validators, but the team stepped up and made the adjustments. So we've got full 24-point reports on this and Spectral. These are set up to be the big winners because of regulations, because of choke point coming down, because of banking and crypto getting permitted. This is huge for Kaspa, AI, everything. My portfolio, Kaspa, Spectral, DEAI, Moonwell. That's it. Very focused in on these AI agents. First bag to build layer ones as they'll start to accumulate the most gains in correlation with monetary policy. Layer ones beef up first and then adding on the altcoins later. Excellent. So be ready, you guys, for December 6th. The jobs report's coming out. We're going to break it down inside macroeconomics, and keep in mind, all of the top swing trades that have been going down have all been connected in some way or another to technical analysis, whether it was a pennant, whether it was a full-blown pattern. So I know a lot of times technical analysis is, considered witchcraft. They're like, oh, we don't need that. You got to stick to the fundamentals. It's all based on fundamentals. It's the fundamentals that are driving it. It's the monetary policy fundamentals, which is what a lot of these crypto social media has just ignored because the last cycle was so bullish. DEAI ready to absolutely explode on this jobs data, Kaspa as well. And then we've got the FOMC meetings coming out. More importantly, quantitative tightening is going to end, and the Fed will be voting on that. This next meeting is huge. They're going to update the dot plot, which I haven't been able to pull up. The link isn't working, but the dot plot is essential. We have posts of that inside Macroeconomics VIP. There's still good action, probably adding on to the render swing trade that we got everybody inside VIP. Render doing well. Going to jump from this $9 to $12 level very soon. Still breaking out from its falling wedge, just like the total 3. Congratulations to all of you guys, because this bull run is going to be historic. This will be like the dot-com bubble. Monetary policy and regulation combined. So the next time that you're doing your own research, take a moment to get off of off-chain data, like we cover in the 24-point reports, and start digging more into monetary policy, FOMC. All right, guys. Thanks for checking out this video. We'll catch you on the next one.